Welcome back to Squawk Box. Back to our big stock mover of the morning. Take a look at Home Depot right now. Shares sliding again this morning after posting some mixed numbers for its latest quarter. Check out where the shares are now trading in pre-market. You're looking at down about 3.5% right now. Joining us for some more analysis of all this is Peter Kieth. He's the senior research analyst at Piper Jaffray. We've been trying to make heads or tails of what's really happening here in terms of this guidance, whether this is specific to Home Depot, whether this is a larger story about the economy and the consumer. Where do you land?
Yeah, I think it's a broader issue with housing from the beginning of the year.
Okay.
Yeah, sure. I mean, we're looking at Home Depot, which is one of the best executors in consumer discretionary. This is their fourth consecutive same-store sales miss. And they've been blaming some things like weather, lumber deflation, which are all valid, but at the bottom line, that our view, and that's why we've been neutral for some time, is that the housing metrics were pretty bad in the beginning of the year. In the earlier segment, talking about rates jumping up to about 5%. I think what's interesting now is that you've seen rates come down below 4%, and month by month, we're slowly seeing housing metrics get better sequentially. So I do think it's, well, I'll call it Q3 is still hangover period for Home Depot.
So we're looking at, by the way, some other retailers down big time this morning. So yeah. If you believe the call you're making, they should be down. If you believe this is a Home Depot only story, they probably shouldn't be affected as much. That's right, yeah. And this is, I think, very specific to housing that had been on a tear for 8-9 years. And then we saw a lot of the housing metrics turn quite negative. In which case, then, when you look at a Macy's, a Nordstrom's, should they be down as much as they are?
Well, I don't follow those stocks, but I think there's a broader view that
Lowe's tomorrow.
Lowe's tomorrow will be very interesting, right? And that there's basically right now the largest valuation gap between Home Depot and Lowe's in roughly 5 years. So there's lower expectations on Lowe's, and it certainly seems to be in the early stages of a turnaround and closing what we call the comp gap between it and Home Depot.
So if there's a 6 to 9 month lag between the bad housing data and where they are right now, does that mean that this is a trough quarter?
Yeah, I think it is. So we've seen now with rates that went below 4% in June, and now just in looking at July, August, September, slowly housing metrics are getting better and better sequentially. So yes, with a 1 to 2 quarter lag, I think this is the bottom. Q4 looks better, and then we start to outperform more so in 2020 with
you still don't like the valuation, though?
No, I mean, I think exactly. It's at 22 times. It's an abnormally high valuation for Home Depot. The stock's up 40% this year, despite the sales weakness. Lowe's to us is the much more attractive one at 17.5 times, and you get this turnaround optionality that could really cause earnings growth to be quite substantial next year.
So, but was the issue here, you think that's just price to perfection? I mean, that's part of the issue that I'm thinking about.
Oh, yeah, absolutely. 22 times earnings. They're basically guiding the year to grow earnings at about 1%. So it certainly was carrying a pretty lofty multiple into the quarter.
What would you buy in the space right now?
Well, Lowe's
but is there anything else you buy?
I mean, I think we're warming up to the idea that home improvement spending is going to outpace consumer spending in 2020.
Okay.
Fundamentals getting better. We would like to see some lower valuations on a few names.